Welcome, everybody. I'm Mike Nugent, Managing Director with Vestigo Ventures, a seed stage VC firm based in Cambridge, Massachusetts. Welcome, everybody. I'm Mike Nugent, Managing Director with Vestigo Ventures, a seed stage VC firm based in Cambridge, Massachusetts. This year's theme for Boston FinTech Week is financial services for anyone, anywhere, anytime. And I couldn't think of a better panel of CEOs to address how they and their teams are tackling financial inclusion and helping to address the equity gap. It's my pleasure to introduce you to David Potter, CEO of Guru Credit, Tyler N., CEO of Retireable, and Romy Parzik, CEO of Vault. So it'd probably be best for the audience if each of you gave everyone your personal background, what's your personal story, and then we can go into a couple other items. Really, what are your businesses doing? How are you addressing the mission? What is it that you're really helping people with? How you're getting to market and the changes that we're seeing that are coming really with what FinTech is doing for financial inclusion. So, Dave, if you could start with your personal story, and then maybe we can just roll through the same way of intros. We'll go Dave, then Tyler, then Romy, if that helps with everybody.
Perfect. Thanks, Mike. And how's it going, everyone? I'm David Potter, the CEO and co-founder of Guru, and we're based over here in Denver, Colorado. A little bit about Guru and what we do is we have a solution for lenders to allow them to grow by recovering the rejected applicants. Speaking a little bit on financial inclusion, to me, what that means or why it's so important is I think it gives a lot of a soul or reason to business, so a lot of real purpose. Financial inclusion, I mean, people's finances touch their everyday life. So whether it's getting a house, insurance, planning for retirement, it affects people in some of the most valuable ways and affects, again, everyone in their daily life. So financial inclusion is really bridging that gap to help those that need it most, because a lot of times our financial systems work for those that it works for. It's great when it works, but then for all those cases where it falls short, is helping bridge that gap and help, again, make capitalism work or make just finances more equitable. So that being said, my solution or Guru started off of a personal problem that my co-founder and I faced. We're both in university studying on full ride scholarships from Bill Gates, which covered schooling, housing, etc. But when we were applying for off-campus housing, since we hadn't established credit, we weren't getting approved for housing. So that put us between a rock and a hard place. My parents didn't have good credit and couldn't co-sign. And my co-founder, his parents and family were immigrants, so they couldn't co-sign in that sense either. So that led to us, again, running into some of our own problems with credit, learning more about credit, and eventually building up our credit and establishing housing for ourselves. But then from there, as we started to ask other friends, family members, parents, people in the communities, we're learning that a majority of people face different challenges with credit, whether they hurt credit, had misconceptions of credit, didn't know how to best build credit. So we started helping out a ton of people build up their credit, started a private practice after becoming certified credit consultants. And after reaching a few hundred clients, we're looking for ways at automating our solution, which eventually led to what would become Guru as it is now. So it started off as a consumer app where we automated suggestions what people can do to build up their credit score. And the end users were loving this. And as we were looking at better ways to have an impact and scales, we learned that lenders reject a majority of all of their applicants. So somewhere from 40 to 80% on average of applicants applying for a mortgage, a loan, a credit card end up getting rejected. And that's a pain point for the lender as well as for the consumer. When we think of that, again, it oftentimes is immigrants or those that come from lower socioeconomic backgrounds. So if Guru, our mission is to provide a path to those without one, because today the status quo, kind of truly is society looks at that person as a deadbeat. Sorry, you didn't get approved for this car, go elsewhere. And our solution helps bridge that gap and help people have more equitable lending.
Great, thank you. And Tyler?
Thanks, Mike, and nice to meet everybody. I'm Tyler N., co-founder and CEO of Retireable, based out of New York, and we're delivering professional financial services to people in retirement, specifically focused on financial inclusion and helping people in the mass market who don't traditionally get access to financial advice. Background on me, I had a really unique start to my career for a big financial services company as a 23-year-old CFP focused on retirement decumulation planning. So sitting in the room with 65 and 70-year-olds every day and understanding how they spend their time and their money After some time there, I left to join a startup here in New York called Policy Genius, direct-to-consumer insurance. But after learning how to build a business, I've jumped back into a space that I'm passionate about, and we are building Retireable, specifically focused on this demographic that doesn't get targeted by financial advisors. Even as a 23-year-old, I was told don't work with anyone who had less than $1 million in retirement, which obviously prices out most people here in the U.S. And also a group that doesn't find financial services approachable. On a personal note, part of this mission is built off of the fact that my mom was a single public school teacher in Milwaukee, and if I was only able to work with people who had $1 million or more, it was pretty eye-opening to me that people like her, who didn't necessarily have the assets, would struggle to find somebody that they can trust.
Awesome. Thank you, Tyler. And Romy?
Hi, everybody. I'm Romy Parzik, CEO of Vault. We're based in Austin, Texas. My journey along the path that I'm on really started when I was a young kid and we immigrated here to the States. My parents came from Peru when I was just a year old, and I was the first person in our family to sort of navigate a lot of the financial systems, but definitely the higher education system. And I think wages have stagnated for decades, yet the cost of education has skyrocketed. And so, just a little personal story, in the 80s, when my dad got his PhD, he took out $3,000 in student loan debt. In the 2000s, when I get my graduate degree, I have to take out $100,000 in student loan debt. So it's just that magnitude of the change in how much education costs. Today we're sitting at $1.7 trillion, and in 2026 we'll be at $3 trillion and growing, is really why Vault exists, is to help employers attract and retain talent that's getting the education that these employers need to deliver on their mission and their business propositions. And Vault really has been the leader in that since 2013. And in this past year, we've also decided to really expand our product set to include some of the pre-planning phases before you get the student loan debt. So payments into 529s, college planning, tuition reimbursement. So our platform now is really about educational assistance to support employees to really drive that retention and recruitment.
That's awesome. Thank you, Romy. Financial inclusion is a term very commonly used these days, but I think different people look at it different ways. And Dave, you were starting to touch on it. Your financials are part of everyday life. So, if you look at financial inclusion, how far do you think it goes? What do you really sort of prioritize within financial inclusion, and how is that driving the mission of your company? Dave, would you mind starting?
Absolutely. So I think it builds a lot of the culture, the mission, and the purpose behind like what we do and why we do it. So for financial inclusion, just to add a bit to the description I gave it earlier, is again bridging the gap on access to, again, just to fair finances, whether again it spans across many industries, but in our sense with Kuru, where society, when rejecting someone, will typically treat them like a deadbeat or send them to more predatory lending options. It's giving everyone that fair chance instead of leaving them in the dark and having to find that path, is bridging that gap. So everyone in the company, I think our company has built out naturally very diverse. And I think that's because those that credit or the financial system is working for, it works for. So that's where you start seeing those underserved populations, those that start out with good credit may not empathize with how that credit system works for an immigrant, for example. Yep. So we've seen, heard from our end users a bunch of insightful stories, but with everyone in the company as well, everyone has had their challenges with credit. So it's built out a very diverse team. It drives us every day and allows us to empathize better with a real problem instead of it just being a business opportunity. You're making a real change, having real impact. And then again, on the other side of it as well is with that having a business opportunity, those foundations behind it, it can really scale.
Great. And Tyler, Romy, do you want to chime in on that?
That was pretty well said. I think it's important for any company's mission, if it's something they believe in, to bake it into the DNA. make sure that they're hiring talent that believes that. So, for us, when somebody gets to retirement and they have $1 million, there's plenty of people for them to talk to. So, we're not trying to get into competitive situation, but we've actually baked into our model and our pricing, really focusing on those people that don't get access to that type of advice. And more importantly for us, it's not just getting in front of them, it's actually making an impact with these people. So we built our model to deliver advice on every single call as a way to build trust and make sure that no matter who's coming through, we're always doing that first call with them. So, even if somebody doesn't have any retirement assets, we will still give them advice on ways to improve the next 30 years of their lives, whether that's, getting them in front of the right employee benefits, educating them about Social Security, et cetera. It's really focused on making an impact with everybody.
That's great because, Dave, you said it well before. I mean, it's all encompassing. It's just making some smarter decisions to give yourself a better position financially. One of the things, I know that comes up too, and I think should be included as part of the financial inclusion discussion, is even just breaking it down to what's consumable. What is not lingo? What is jargon? How do people build that trust that you refer to there, Tyler? And how do you make it something that people understand? So much of, and I think it's one of the things we forget as working in the industry, how natural or just second nature financial terms are that we all get. But 98%, 99% of Americans, they don't. And that really does cause a lot of the problems where they're afraid to make decisions or they're afraid to take that next step because they think they're going to, hit the wrong button and lose their portfolio, or they're going to, trust someone that they, entrust money to someone that's just going to run away with it. And there's so many safeties and breakers and protections there, but it's just a lack of awareness, So Romy, do you want to just cover mission real quick and really how far it's extending, particularly with the socioeconomic demographic benefits that you're seeing?
Yes. So I think similar to what Tyler and David said, they're both talking about a system that is broken in some way, and how our what we're bringing to the table as entrepreneurs is something that drives financial inclusion. Despite or because of that brokenness of the system, right? And so, for us, one thing that's broken is the fact that, 70% of people are graduating with about $40,000 of student loan debt. And when you look really closely at the demographics and the gender breakdown of that, of the $1.7 trillion, 2/3 of that is held by women, who, by the way, during COVID are unfortunately under pressures, have been under pressures to leave the workforce for childcare reasons, for other reasons. And then minorities and people of color, because they are less likely, these communities are less likely to have intergenerational wealth. Similar to my story, we started all over when we came to the States, right? We were lucky in that we were able to do so, but not everybody is able to sort of hit reset, right? And so there's a confluence of events that create a situation where women and minorities, people of color, are disproportionately burdened with student loan debt. So then when you take that into the workforce and these dynamics where you're trying to recruit and retain a diverse workforce, then you need to have a whole set of benefits and culture that allows for that to happen. And we believe that Vault is one of those main tools that you can put in your sort of people ops tool set to help you drive the diversity and inclusion initiatives.
That's great. Thank you. And it's really interesting to hear sort of that conflict on the lending side. People, diversity, socioeconomic factors are really coming in conflicting ways, where absolutely burdened with student loan debt, but unable to get traditional application debt. And so, where is that sort of predatory line crossover? Are you happy to sort of jump in and get $40,000 of government loans to get your education, but you can't get the $2,000 to pay for your car to get to the school? So it's such a, to your point, it's a broken system. Shouldn't there be a standard that applies to any credit that someone's taking, because you're looking at them more holistically. And Dave, I know you've pointed out to me so many times, it's not about not about bad credit. It's really about thin credit. And the systems, and I forget, you said it's probably a 60-year-old system that the credit ratings are based on at this point in time. So things have changed, but not the credit side. And unfortunately, credit's become sort of more of the American dream than having a house at this point in time. One of the things I'd love to dive into, because people are entrusting with their most critical information and all of their assets in instances like Retireable. How do you really build the trust with the consumer or with the companies that you're working with for the products that you're bringing? Because I think that's one of the hardest things. Startup companies have to build trust with anybody, but FinTech is that much more difficult, because it's not just, I'm going to go on and get a couple songs and I've signed up with my email. I'm giving you my social security, my credit card, my bank. You're going to tie everything into Plaid. It's scary for people. So how do you really build trust with your customers, be a consumer or a business? Romy, you want to take that one first?
Sure. So we are very serious about positioning ourselves as being conflict-free. What that means for us is that we never make money selling anything directly to the employee. In some cases, for instance, refinance is a very, very powerful tool, but in other cases, refinance isn't the right solution for employees. And so we have a variety of different pathways that do it. Refinance is one of those pathways, but we never make money off of that. And that's been a really powerful positioning for employers, because the employers understand that we're a holistic solution with really broad-based advice, and that we're not going in to sell anything to the employee, like here's a new loan, right? And so that's how we build trust at that level. And then, as a group, you've sort of all mentioned, like, it's just really important that the products meet the customers where they are, and, that it's not, overly burdened with jargon, so that people can upload their student loans, take a look at these literal acts of Congress that create, the repayment programs, and be able to understand those in a very, quick time frame. People are very busy, and be able to make educated decisions that help them get to a better financial path quickly.
Awesome. Thank you, Romy. And Tyler?
Yeah, kind of talked about it earlier about, speaking the language and meeting people where they are. One of the things we've been so excited about since we launched our retirement paycheck, which is, basically we help somebody build a plan and then roll over their assets into a portfolio that creates durable retirement income. But the thing we've been so excited about is how quickly we're able to build trust with this demographic, because we are speaking their language and we are simplifying things and being transparent. I talked quite a bit earlier about how financial advisors don't want to call somebody in this demographic, but from the consumer side, they are intimidated when a financial advisor is wearing a suit and talks about Sharpe ratios and Monte Carlo analysis. So we're focused on answering their core questions, giving them professional, real advice that's going to impact their lives, and distilling down these very complex decisions that they have to make in retirement into simple, easy to use product.
And I think I'm glad you brought that up, because I think it's one of the most fascinating expansions of product, particularly within Retireable, where you guys are doing all the heavy lifting and, giving all the advice, and, the high margin part of the business, or what relatively high margin, you were still handing off to the traditional, wealth managers and advisors. And it seems like the market pull, your customers were saying, look, we trust you. We're giving all this information. Why don't you just do everything for us?
Yeah. And the results have been great. I mean, we think about kind of share of wallet, and, in a short 2-week window, with an initial phone call with somebody they've never heard of from, but more importantly, somebody who's there to listen and understand their goals, we're able to help people roll over their biggest asset in the world, typically is their 401k plan, into a Retireable IRA.
Very cool. And Dave, you're helping people at, what can be very critical or very emotional stages. If someone has to go look for lending, there could be a need, it could be a crisis situation. And, if you can explain sort of the experience they go through from that original application to where they now have to work through Kuru, I mean, for me, it seems like you're building that relationship with them before they even know it. And then you're really helping them through that process. So if you can maybe just give everybody an example of what someone goes through and how you do build that trust with, the Kuru experience.
Absolutely. And since the last question as well was on building that trustworthiness, I'll kind of start there. But for our solution, getting that data or building out that trust is essential. We started off as a consumer app in the App Store for about 2 years, and there was a really high barrier of entry for, I would say, two things. One of them was user, or I can maybe even categorize it under one with two branches, but is user experience. So I don't know if you ever downloaded an app, but if something is glitching, isn't clean, isn't flawless, you're not going to have that trust to enter your information. And then the other side is that allegiance to security, being clear, upfront, and transparent about that. And I would say that's just table stakes for end users being comfortable with inserting the information. The other side, I would say, is the user experience, but going beyond just that digital experience. So I think Tyler mentioned earlier that in his experience that they'll actually hop on the phone call. So a few evolutions that we've had with the solution to improve or build out that trustworthiness. One is offering a free consultation with anyone that's onboarding, and anyone who we're hopping on the phone with. One, from our own experience and what eventually is interpreted into the technology, is it has more empathy for just truly understanding more of these diverse situations. And then another thing that we do as well is with the user experience, is the more that we simplify the onboarding for the end user, is there's less areas for their mind to have friction. So we typically white label under our partner's branding, and it's just a continuation of that experience. So there's not friction on being handed off to another third party, inserting a bunch of information. So we try to keep it as seamless as possible as well. Going to your initial question on how that user experience works. So if you imagine you are an applicant for, you're looking to buy a new mortgage, we would typically partner with the mortgage company, and instead of at the end of the application, say your credit score, other factors were too low, instead of getting a rejection, is our technology has a personalized action plan. So you may get messaging rather than saying, sorry, you're rejected. It would say something such as, congratulations, you were pre-approved for a personalized action plan. Get started. At that point, once getting started, would be where some of that data passes over on the back end, which is allowing our system to personalize an action plan for you in real time. So then you're seeing your credit score and all of that's up to date. You're having personalized financial literacy. So instead of just seeing stock financial literacy, this is how it applies to you and your financial circumstance and what you can do to improve that. And then our system has a personalized action plan. So then again, in real time, you're seeing what you can do to improve not just your credit, but other factors such as debt to income, debt to asset ratio, and what you need to do, say down payment, in order to get approved. Once you're reaching that finish line, we notify the lender as well as you, and close loop there. And the results that we see with the solution or this experience has been pretty strong. So in terms of trustworthiness, we have about on average 50 to 75% of end users that go through and enroll and share over this data. So really strong trust there and strong consumer NPS. And then for the end results, about 20% are being fully rehabilitated to get this mortgage, you get this loan that they're applying for.
That's awesome. That's such a huge difference. When you take what you said before, depending on the lender, anywhere from 40 to 90% rejection, but now 20% conversion rate, rehabilitation conversion. It's and just the cost for customer acquisition and how much of that is completely abandoned. And I know you've mentioned it before, they might resell those leads for pennies on the dollar. But now they're actually getting that lead back in, and those people are being serviced by a good lender, not a predatory lender. One of the things that stuck out, you said there, it was really sort of the caliber of the product you need to release. And that's something that always sticks with me in FinTech. Given the sensitivity or given the implication of a broken app or a broken product, FinTech doesn't have that ability to put up, ghost buttons. You can't see if somebody hits, fix my IRA 5 times and then go build an IRA solution. It's not like a consumer app. So out of the gate, you have to build a killer product. And that's one of the things that, is sort of how people were saving money on building companies quickly, is they'd put up a splash or just a ghost button. And then if people wanted enough, then they'd go build it. But we have to really do a lot more research, a lot more customer development, a lot more pricing discovery before we even put, version 0.10 out there. So, how do you really control the cost? And the reason why I'm asking that, costs always seem to be the barrier to financial inclusion with many products. To your point, Tyler, if you don't have $1 million in assets, don't deal with them. How do you get to advice? Well, if someone doesn't have a good credit portfolio, they're not going to get a credit card. And years ago, and it's one of the things I learned recently was about the credit card revolution. Credit cards were typically reserved for very wealthy individuals because it's an unsecured credit line. When credit cards were brought to the mass market, it was an uproar. How dare you use these balance sheets for people we don't know? Well, that's the point. So I'd love to hear how you're controlling costs to help lead to this democratization of financial services, either internally with your company or with the customers that you do work with. So, Romy, you want to start there?
Yeah, I think the most powerful example we have is, case studies that our own clients bring back to us about what our product has done for them. So we're a SaaS company. Our partners and our clients pay per user per month. And relative to other costs in their portfolio, our costs are fairly minimal, right? But what we're seeing is that clients, especially healthcare clients in this pandemic world that we're all in, are seeing tremendous results, for instance, from providing these benefits to frontline nurses. Frontline nurses right now are, just many of them at their wits' end dealing with everything that they have to deal with. And so it's important to put benefits that really resonate with them forward. And so we have a partner, for instance, based out of Nebraska, who saw a 55% increase in retention, which to them translates, these are their own numbers, to $5 million in talent management costs. So our small technology fees are really dwarfed by the return that they're getting. And by the way, it also aligns with the well-being of the nurses. On average, they found that they cut nurses' time to repayment by 64 months. So it's really the savings on the attracting and retaining talent that more than make up for the small cost of our technology.
Awesome. And Tyler?
Yeah, we get asked about costs quite a bit from our customers as well. They often ask how we're able to charge less than what they see from the insurance agent that's knocking on their door or their 401k plan. But as I like to tell them, I don't need to show up in a fancy suit and then drive a car to their house to get them to roll over their money. But for us, we think about costs in terms of, what's the operational cost to get somebody to move over their nest egg. And, what we've done is we've really focused on that operational cost comes from that advisor building a relationship and building trust with the consumer, and removed all the financial decision making from that process. So really their whole job is just to connect, have empathy, and understand this person's goals, which was what really drives the business. And we also can be smart about who we acquire and how, making sure that we're bringing in people who have a high sense of urgency and are searching for things that we're able to help them with. So we think about costs like that, and as we scale, we build a bigger and bigger data set that lets us become more efficient on operations. We're personalizing a plan for everyone, but these aren't bespoke solutions for our customers. We've had several hundred of these types of profiles come in the door before, so we're able to just get more and more efficient the bigger we get.
And David, I know firsthand you guys are incredibly capital efficient. So just seeing how you're able to stretch those dollars and build out, these institutional caliber products, let alone working with these channel partners or these major lenders where they've got the comfort to know that you've got a product that's worthy for them to work with.
Mm-hmm. No, absolutely. And I think when thinking of that in mind of our partners, you were mentioning earlier on, like the comparison being like pennies for the dollars at best. So for like a lower value product, say in consumer lending, say a credit card, that's worth at least a few $100s to the lender. But when they end up doing what's the status quo today, which may be sending it off to say more predatory lending or another marketplace, they may be getting just pennies for this lead. So they're really changing cents here for hundreds of dollars. And that's again, in the case of just credit cards, this expands to personal loans, mortgages, et cetera. So it's just delivering a significant amount of value, I would say, is a core towards our model. And for any PFM solution, a lender, if they were deciding to in-house that, that may be millions invested, and that's, again, for whatever generic solution. In our situation, we're having the scale of the engagement and the results across all of our partners, so we're able to continue to provide efficiencies and bigger wins for each of our clients. So they were seeing a number of lenders, again, continue to lean on, say, third parties or other fintechs to help bridge that gap.
Awesome. So one of the things I'd love to ask, all of you, just to frame up for the benefit of the audience, is really the size of the market. And I know, Romy, you talked about it, about how quick it's growing, but just how big that impact is. And I'm not asking you to do a TAM analysis, but just what's that bullet point for someone to say, wow, I didn't realize student lending was such a problem, or how tough it is for pre-retirees, or how many Americans, even, let alone globally, how many people are just not being able to participate in the credit system. So, I mean, Romy, I know you've got some pretty good stats on hand, and I love to preach those there, or preach those stats myself. So I'd love to just make sure everyone can frame up and see just how big this is.
Sure. So, just going back to what I said earlier, we're at $1.7 trillion. That path is not slowing down at all. 45 million Americans. We don't hope, but we see that by 2026, we'll be at $3 trillion. About 69%, 70% of four-year grads are graduating with student loan debt. Again, that's about $40,000 in student loan debt. And I guess I would contrast that with only 8% of companies right now in the States offer student loan benefits. So you have so many people. And by the way, our products and services also can be shared with family members. Yeah. So even if the family member in the company can't use the benefit because they don't personally have student loan debt, they can share it with a family member. So it's just really, there's a disconnect between sort of the market demand for these types of benefits and the supply from employers right now.
Well, it seems like there's definitely quite the green field ahead of you if there's 92% of companies still need to adopt the number one requested benefit in America. So, Tyler, if you could sort of frame up what is the pre-retiree crisis in America right now, so people can start thinking about how big this is and not just waiting for the millionaire to roll up and write them a big check to manage.
Yeah, I mean, hard to log on to LinkedIn and not see a new article about the retirement crisis in America, partly due to credit and student loan issues as well. Everybody knows the statistics, though. 12,000 people retiring every day, yep. 3.5 trillion of unmanaged assets in retirement. A lot of these are just left in 401k plans and probably not the right risk tolerance. So it's a massive opportunity. We don't like to slice the TAM like that. We focus on making this impact for people, and the assets being unmanaged is one small piece of it. We want to help people make those big life-changing decisions when they get to retirement. Social Security is probably the biggest financial decision most people ever make in their life, and it's helpful to have an advisor alongside you when you're making decisions like that.
Awesome. And Dave, would love to hear how you would look at just the total size of this thin credit market and sort of this poor digital management by most of the lenders and FIs.
Yeah, absolutely. So I think rejection is a largely overlooked or underserved population when it comes to lending applications. When we look at the statistics, we mentioned earlier, but 40 to 90% of all applicants are rejected and just reach that dead end. So it's a big pain point for lenders. A lot of consumers face this. And with our solution, just how we look or think about that is, again, just helping bridge that gap when we think about financial inclusion and providing a path to help improve that. So with that, about 80% of people that are being rejected, that ends up being about $100 billion lost in loan opportunities. And about 2.5 million people are applying for loans every single day and end up getting rejected. So the volume there is large, significant, and largely underserved.
That's and all these numbers are so big, you almost lose perspective of them, but it's just, it's absolutely crazy. One thing I want to do, just reserve a moment here at the end for a gratuitous plug for each of you to make sure everyone does get to know exactly, who should be thinking about working, with Vault, with Retireable, with Kuru. So if we just go around, counterclockwise, we'll start with Romy. You just want to let people know who really should be considering bringing Vault onto their platform.
In the past, I would have said it was larger corporations, but what we found, especially since tax laws changed that allowed employers to provide $5,250 per employee per year, payroll tax-free in student loan benefits, is that it really, we have employers coming to us that have 5 people, right? So it's really, I would say it's not a size, number of employees. It is, are you having challenges recruiting and retaining employees?
Yep.
And, or are you trying to build a culture with accompanying benefits that is really modernized? And so if you're looking to modernize your stack of benefits, you are the type of employer that would benefit from our educational assistance platform.
Awesome. And if you could just tell everybody the URL for your homepage, so they know where to go find all this great information.
Yes, vault.co.
Awesome. Tyler?
Yeah, I mean, people don't have pensions anymore. People aren't buying annuities. Retirement decumulation planning is a massive, massive problem where you're shifting from having a paycheck and income certainty into a period of life where you have a lot of uncertainty and anxiety. So, we are onboarding partners who have a vested interest in providing that income certainty that was traditionally provided by pension plans to their, employees, customers, etc., who are moving into the retirement age.
Awesome.
And it's retireable.com, Retirable.
Well played. And Dave, to end it on you, and all those companies that don't want to lose their leads and make sure they're filling their buy book or their book of credit. Can you please walk through that?
Yep. I'd say if you're a lender or a financial institution, or at least you're close to one, would more than love to be connected. I think anyone that does lending, this is, as I mentioned earlier, largely underserved opportunity.
Mm-hmm.
So I think we see some big wins around improving that user experience, growing loan accounts. And I think, again, something that we all could agree on is that priority to grow revenue, grow loan accounts is a major driver. So we definitely love a conversation. And we think when we look at the market as well, I didn't mention this earlier, but we see what some big players are doing, like Apple, and they released what's called Path to Apple Card. It's very similar to what I just described. So they invested a lot into in-housing a similar solution where they're investing into exactly what I mentioned, but rather than getting rejected, giving people that action plan of what they can do to get approved. So there's definitely a lot of people, looking at this space and looking at turning that to opportunity. So if you think that would be you, we'd love to get connected. And although Tyler's lead there, the website is kurucredit.com, CURU credit.com.
Awesome. And then Romy, just a quick treetop highlight on the book that you've got coming out that you co-authored.
Yes. So this Thursday, September 30th, we're launching The Future of Building Wealth. It's a collaboration amongst more than 60 authors of essays on best ideas for bridging the wealth gap. And anyone who signs up for the launch event on Thursday, even if you don't attend, will get a link to download the book for free.
Awesome. Well, I really appreciate all 3 of you participating in this, understanding my technical issues that I tend to have as I'm working through these things. So thank you very much. And I hope the audience really enjoys everything that you shared here. Wonderful insights. And again, appreciate it very much. Thank you.